Hello everyone, Theunis here, FX trainer of South Africa. Welcome to this webinar. Before I go on, I always check, can everybody hear me? Can everybody see me? Very important, obviously, with the webinar. Owen, Godfrey, you are old clients here, old acquaintances. Okay, yes, fine, everything is fine. Okay, guys, this is mental analysis part 2. What we did in the first part, we discussed, we were almost finished, but we didn't quite finish. There was some other practical stuff I also wanted to discuss. So what we're going to do here today is just recap quickly what is fundamental analysis, what is the role, and then just finish. And then I'm going to give you some practical tips about what impact for a technical analysis, a technical trader, what fundamental analysis, what aspects you have to attend to. So let's dive in. Anytime? Okay, Charlotte says sound. Is the sound a bit low? Let me just check the sound here. I can see it here with me. Hello, hello, hello. It looks quite fine from my side. Okay, Charlotte says it's fine. Good. Always good to check. Doesn't help I speak here and you guys can't hear me, you can't see me. Right. What we did is we looked at the introduction. Now, from the start, okay, we'll quickly do that again. So I'll just confirm what my thoughts are on the basics about the difference between the two. And we looked at what fundamental analysis is. So if you're not sure what it is, if you want the detail, I'm not going to discuss it again. Then I can, if you want to, I can send you. You can just email me. I decided I'm going to test something else here. So in case somebody wants to email me, I'm going to on the chat. I'm just going to send to all of you my email address. So because sometimes people ask about it and then they perhaps they don't get it. Right. So next one is we start with one again. We've done that to analyze a country's economic conditions. We've done that. Hopefully, as you can remember if you were there, it really takes economists. You must study it. You must really have insight into what every type of report means, and not even every type of report, but what the connection between the lot are, what the effect the one and the other are, to be able to be a good fundamental analysis. And that is why we always say you have to be a economist and an experienced one at that. So not many of us are, but it is important to understand. So we also discussed the non-economic factors affecting the forex market. And this is where we stopped last time. We stopped at comparing the major currencies. Now, this is important because there's the majors, especially the major currencies. About 80% of the volume happens on the majors. Now, a lot of guys don't realize that, and they trade on the mixes or the exotics and the other pairs, and then they don't realize there's actually not a lot of volume there. 80% of the volume on the forex market is centered around the major currency pairs. That's very important to understand. That's why we're going to discuss that. And then we're going to discuss also the disadvantages of fundamental analysis, and then questions and answers. And then before that, I'm also going to show you some practical issues for a technical analyst. What you do, what is, in my opinion, anyway, important. Right, just right straight off, like we said, the fundamental side, the fundamental analysis side, studies the cause of market movement, and you need to know what's happening there. Technical analysis studies the effects of market movement. We study the price charts, so we don't really worry we don't really care so much about the news. If you focus on technical, you look at the chart, you can see the effect of what news does. My opinion on this is just, especially if you trade on the lower time frames, is just to be aware of when the news is going to be. And I'm going to show you, let me show you now. I'm going to show you on our website. If you want to know when, which is important, when different news events will be, you can look at on our website. We've got at market analysis, you've got the market of economic calendar. Right, if you open that up, it's going to show you a calendar of the most recent events. And what's important here is there's a lot of news, guys. So there's a lot of different countries, a lot of news, and it's going to be impossible to be able to figure out, to scroll through this and to figure out what's what's going to have an effect or not. So just my opinion, I go to the filter, you click on the filter there. What I also do is I filter out the small countries. So the countries that doesn't really have a big impact, like Hungary, Colombia, the smaller countries that don't really have a big effect on the forex market, especially not the majors. So I filter out the smaller ones there and leave the bigger ones. But most important is you go and click these ones, you decide, you click all of them, that's all right. The most important part of this is we're going to filter out it says here the volatility, so it filters out the important news events, the events that I only want to look at events that causes a lot of volatility in the market, not small ones. That's not so important for me. So if I save this, then you'll see it makes it much more easy. So for instance, Monday, Tuesday, Wednesday, today's Wednesday, just before the trading session, I quickly check at what times big news are coming out. And then I make sure that I flag those times. Because I don't want to open a 5-minute or a 15-minute, or even a half an hour position just before the news. Because normally with news, there's a lot of volatility, the market goes up and down, and it can easily just shake you out of the position, engage you, as well as eat your take profit or your stop loss, get you out of the position. So it's not so nice. So sometimes I have forgotten about this, and then you put in a trade, and then you can't understand what's happening. All of a sudden, it's just over. So it's not a nice feeling, right? So if all of you guys know where to get this, you go to market analysis, economic calendar, get the calendar, and then filter. The most important part of the filter is the volatility filter. You just want those markets, those news events that's going to cause a huge, potentially a huge volatility effect on the market. So that's the one that you filter out there. Right, let's get back to our presentation. Right, we are technical analysis. We are not economists, so we focus on the technical side. But it's important. It's good to know, what happens inside the fundamentals. A lot of guys, the feedback I got from the first one is, thank goodness that I don't have to really worry about that. But it's good to know the guys that do the fundamentals. That's what they have to know. That's what they have to study. That's a lot of work, guys. Technical analysis is much easier. And like I said, the fundamental guys as well, they choose charts anyway. So when the news happens is important, but what happens is not so important. We know it's going to have an effect on the market. We're going to see it. Even the big guys. I'm going to, just for interest sake, show you what I call actually not I, Bill Williams and other people call the underlying structure of the market. Now, what we're looking at here is we're looking at obviously a price chart, and all I've done is it's clean chart, so there's no indicators here. What I've done is I've just highlighted the structure, the underlying structure of the market, and it's just basically trends. There's uptrends, there's downtrends, and there is ranges. In the 4-hour in the USD, there's uptrends. There's not so many ranges. So it's very nice to see. You see the uptrend, the downtrend, the uptrend, the downtrend, the uptrend, the downtrend, the uptrend, the downtrend. especially the lower time frames are a lot more. It's got a lot more noise. But and according to technical analysis, the definition is we study price charts to identify the early stages of the next trend. There is the early stage of the next trend. Early stage of the next trend. Early stage of the next trend. You can immediately see, if you look here, the effect of news on the markets. Candles like these are caused by news. Candles like this caused by news, right? When there were no big news, then you have this beautiful structure here, this wavy structure here. So news, that's why we have to be careful with news, right? But we don't worry what the news says, because we can see the effect of the news here. If we know news are coming out, we wait, we see the effect, and there the waves continue. So perhaps on a lower time frame, there might be an opportunity there. That's the fractal nature of the markets. It's beautiful to see. I love this rhythm. Okay, so now I'm going to skip. We're not going to go through everything again. We looked at this, what it is, in a bit more detail. Okay, let's go to a little bit down where we were the last time. Right. Like I said, if you are interested in the above things, you can just watch the first part. You can just send me an email, and then I'll send you the link. Right. What we're going to do is we are going to compare a few major currencies. And like I said, the importance of that is 80% of the volume that is traded in the forex market is traded on the major currencies, the major currency pairs. So important to know that and to focus that as well, especially if you start getting good volatility, a lot of volatility, a lot of volume means the waves are more, how can you put it, are more structured, are more, what is the right word? Are more interesting. The words is out of my head now. I don't want to say soft, but it's not so much chaos in there. All right. Okay, so let's look at the ones. The US, nickname is the boss. We've got the Eurozone, Germany, France, all the Euro countries. That's the biggest currency alliance in the world at this stage. We've got the UK, nickname the old lady. We've got Japan, the Asia agent is the nickname. We've got the Swiss haven, Switzerland. And then we've got a couple of other ones. It's Australia, Canada, and New Zealand. And they are known for their raw material exporters. They are big raw material exporters, right? So let's delve a little bit deeper. The US, I see no questions there, so I'm going on. If you have questions, please post them, and I'll check now and then. Right, the US is the biggest economic power in the world. China is second at this stage, but their currency, the yuan, I think there's a little bit of hesitancy to trade that for a number of reasons. We're not going to go into that. But the US has got a massive currency. This is basically how it's split. So the services comprises a big component of the GDP, and industries, agriculture, and others. So services, as you can see, is a big component. They're the world's biggest economy. They dominate the world stage, as you've seen on the news with President Trump, with all his tweets and all these things. His trade war that he's having at the moment. It causes huge amounts of disruptions or huge movements on the markets, right? They've got, it's called a reserve currency, because a lot of currencies, most other countries in the world, when they want to trade something, and it's then they either go back to the Euro USD, or they store some of their currency against the Euro USD, and then they use that to settle when they buy and sell things. With exports, imports, people tend to trust the Euro USD. So would rather trade in the USD than some of the smaller countries, which might fluctuate a lot and then cause losses unexpected losses on transactions. Right, service industry, they've got a big service, finance and technology industry. Employment, consumption, there's a couple of reports and indexes and so on that has a huge effect. So you'll see that on the high volatility news events that you put out. So especially like the reports, the employment, the non-farm employment, it's a huge thing. It causes huge movements in the markets in the lower time frames. And sometimes even it's associated with the higher time frames with trend changes. So it's important to know when that happens, what's going to happen there. Don't worry too much about that. So we're not economists, but we have to know when that happens. That's important, as well as these others as well, the consumption reports, the housing market reports, or stock market reports, as well as the bond market reports. It will be highlighted for you there, the time, and that's an important thing for us. Right. The Federal Bank, the Federal Reserve Bank, also when they take decisions, currency policy decisions, it has major impacts on the market. Right, the Eurozone, it's the biggest currency alliance between countries to work together regarding economy. It's the world's second favorite reserve currency, so people will trade in US first, and if not, then they'll go back to Euro. The fact that the economies are so big means there's supposed to be some stability there. And when you're trading between one country and another, or big businesses between countries, you don't want a big jump in a big difference in the currency pairs, in the different the ratios, the difference. You don't want to, you don't want big movements in the currency pair while you're doing a transaction. You might end up paying a lot more, which would be not good, but less, which would be bad for the other part when you do those transactions. Right. German, French, and Italian, the major economies there. Export driven, they export a lot. Manufacturing indicators are therefore very important. So if you see manufacturing reports going out in that economic calendar of yours, and it's French, German, Italian, you know it's going to be, it's going to have an effect. It's going to cause ripples in the market. Right. Credit crisis. As you can remember, this caused a couple of issues. And as we know, with Brexit, there's a couple of questions surrounding Europe. You know, are the guys satisfied in there or not? And that also causes a lot of ripples. Right, leave that one. Okay, the UK. The UK is I think, one of the world's oldest financial centers before the US. Their finance and housing markets have a big effect as well, not as big as the US, but still exports. They are obviously linked to the euro, but they're trying to get out with Brexit, but very much linked to exports in the euro. The inflation is very low, and that means they're managing their currency very well. Okay, Swiss. Traditionally, for as long as I can remember anyway, Switzerland has been a safe haven, a tax haven, because they stay neutral. They don't really get involved. I don't think they've been involved in any war, big war ever. So they call the safe haven for free money, and their bank system is very good. The interest rate's very low. They manage the economy very well. They are very, very risk averse, so they don't like risk. That's why they also, I think, they have a very big gold reserve to stabilize their currency. Right. They've got a big manufacturing sector, also export driven, and about 2/3 go to the EU. Right. Japan, the world's #2 USD reserve, meaning they hold a lot of US dollars. They buy it and hold it, which they then use to trade. They're the biggest economy in Asia, among the floating currencies anyway. Like I said, China is big, but their currency, people are not trusting it so much yet, so it's not fully being traded, really. They've got a low inflation. They've got a square agreement. They've got all sorts of agreements with because they export so much. They import a lot of raw commodities, and then they in their factories and so on they refine it and then export it to other countries. They've got a low interest rate. They've also very risk aversion. Interestingly enough, a lot of countries in the world have realized that with all the opportunities with the fourth industrial revolution, if you don't know what that is, please go Google it. Means it puts a lot of opportunities in ordinary people's grasp. In their it puts, it gives them opportunities, and especially regarding managing your retirement portfolio. So a lot of countries in the world, and I know Japan is one of the foremost, has put in a lot of education into trading economy, practical economy, so that their people can manage, they can use opportunities that comes with the fourth industrial revolution. It's basically just the internet, the effect of the internet and cell phones and technology is going better and better. Overage that's coming down, and they educate their people so that they can actually manage their internet or their on the internet their retirement portfolios better. All governments want as many of their citizens as possible to be able to retire, because then they are not a burden on them. So, and especially Japan, I know is doing a lot of that. I heard some figures about at this stage, something like 40% of their citizens are already actively managing, much more actively than previously, on managing their retirement portfolios. That's a very, very good thing. And that's part of FXTM's mission as well, is to educate people to be able to use this opportunity, this online opportunity, which is actually just applied social economics, right? We all do it. It's people, it's trading, it's needs and businesses, and it's economy. Economy simply meaning the careful management of all our available resources. Everybody is doing it, right? Okay, let's go on with Japan. A lot of manufacturing, a lot of export. Let's look at other ones. Last one is Australia, Canada, and New Zealand. They export a lot of raw material to other countries, right? Australia exports mineral resources. It's the second largest exporter of gold. They've got an index that is linked to that. The index was important. That news normally causes us a couple of ripples in the market. Canada is the third largest exporter of natural gas, ninth largest oil producer, and New Zealand is sheep, dairy, and wool. Right. So they don't cause such big. The reports doesn't cause such big ripples in the other currencies, but obviously in their own currencies it will cause ripples, right? And effects on the market or waves in the market. The trade data, employment are very important or unimportant, and their currencies are what we call high yield, carry trading. A lot of guys trade in it, but it's not necessarily a holding for a reserve currency. So there's a lot of trading done in those currencies because of this raw material that they export. Okay, it's near the US and it has a special relationship with the dollar. You can see that if you look at the US Canadian dollar pair. Sometimes, yes, you can see that. Okay, now very important. We've looked at all the intricacies, what entails fundamental analysis, what you have to do if you decide to trade using fundamental analysis, and it's quite a mouthful. It's quite difficult. So there's lots of complicated sets. That's the first one. There's lots of complicated sets of data, and you have to know not only what they mean each, but what the impact of each set is on the other sets. So very difficult to do. But anyway, and I have a lot of respect for the guys that are actually very skilled in that. One problem with fundamental analysis is it's very difficult to quantify. You can't really, you can see what's going to happen, you can guess, but you cannot specifically say this is going to happen. The market is going to react and go 10 pips up or 10 pips or 100 or 1,000 pips down. That's impossible. So guys that I know that do fundamental analysis, the big hedge funds obviously has the research centers or research departments. They use that for the bigger time frames. So you look at the daily, maybe the daily, I think, perhaps the weekly and the monthly. So that's the type of trades that you do when you are a fundamental analyst. So, or if that part is important for you. It cannot obviously provide for you exact buy and sell points the way technical analysis do. So that's why they also have to use technical analysis. They also have to use charts to identify their specific points when they enter. Right. The rates don't act in strict compliance with fundamental analysis. So what happens then is, for instance, let's say with the US, if everybody's expecting the interest rate to go up, then they expect the currency to become to react in a certain way, and many times it doesn't. Many times that news, the report has been discounted by the market because some big firms already know this, because they've got their own research departments, and then the market just reacts opposite or just doesn't react. So that happens a lot, and that's one of the problems of the disadvantages. All right. I've basically shown you guys all the things I wanted to show you. Is there any questions at this stage? If you've got any questions, please post it. Then we can see. Guys are silent. Do you know everything? While we're waiting for somebody to ask something, I hear a lot of guys that call themselves news traders, and people in general think that news traders are fundamental traders. They are fundamental analysts, but it's not necessarily true. What most traders, okay, most of the guys that speak about news trading also lose accounts. So when I speak about a news trader, I talk about a guy that's a technical analyst, and he's got lots and lots of experience. He's got thousands and thousands of hours. He knows about the underlying structure of the market. He knows about proper money management. He knows about high probability money management, not low probability money management. He knows all those things, and he's mastered. He's consistent. He's trained hours upon hours, like we said, like we always quote. Bruce Lee says, I don't fear the man who has kicked 10,000 kicks once, but I do fear the man who has kicked one kick 10,000 times. So a master has kicked one kick 10,000 times, he's good with that one kick. So if you understand the underlying structure of the market, if you know what technical analysis is, we look for the early stages of the next trend. Then what those guys do is they simply go during news times. They go on very low time frames, like the 1 minute and even below, 5 minutes as well. Can even perhaps 15 minutes. Most of the guys that I know that do it successfully are on very low time frames, 5 minutes and below. And what they simply do there is they wait for what technical analysis prescribes. They wait for the early stages of the next trend. So because the time frame is very quick, you get trends, uptrends, downtrends, ranges. And when they see a beautiful uptrend or a beautiful downtrend, then they simply wait for the early stages of the next one, and they have practiced a lot, and they put their entries in there, and they manage their risk extremely tight. So normally they bring their trades to break even pretty soon, just in case there's whipsaws and stuff like that. But or they take partial profit. That's another thing a guy can do. If you take partial profit, then it means you can leave your stop loss. You can give it a lot of room, but you're already in a break-even situation. So that's what normally when guys call themselves news traders, they're still technical traders, but they just they're trading on the very low time frames during news because there's such a lot of volatility. Okay, Elijah, do politics affect the trade? Yes, politics affects the trade in the sense of when, for instance, our president or the US president Trump tweets political, so then it has an effect on the market. Unfortunately, we can't predict that, and I think that's one of the big problems people have with him, is there is scheduled news events where people can, make proclamations and decide things. He tends to not like that, and he puts it anyway. He puts his tweets through anytime, and that causes some unexpected ripples in the market, and that can definitely affect your trade. But in general, most of the big announcements and so on, they're scheduled. So you know when it's going to happen. If you know when it's going to happen, you can just manage your trade accordingly. Either take your profit or bring the break even, or take partial profit if you've got a trade open on a small time frame just before the event. Just to make yourself safe there. Right. What are the another question from Elijah? What are the major news that affects the markets and where you're going to get them? Right, I'm just show it to you again. As I explained, we go to the market analysis. We look at the economic calendar, and when we have the economic calendar, I like to choose the filters. I just like to choose the high volatility ones. The reason why I do that, let me just go back to that other one. The reason why I do that is the small events you won't able to see. You won't be able to see the effect on the market yet. But the big events, you'll see these massive huge candles. This is on the 4-hour time frame. So these high volatility type of events, when we look at the calendar there, these type of high volatility events, not all of them, but they might, remember nobody 100% knows, they tend to cause these huge candles. And this is on a lower time frame, these huge candles can wreak havoc with our trades. So that's why they are the ones that we look at it. They are the ones that we look at, or we are aware of the time when they come out anyway. Okay, I hope I answer your questions. So you can get that, and just go back there. You can get that on our website, market analysis, calendar. You go to the filter, you just put the volatility on the highest one, and then it shows you exactly, for instance, today, early in the morning, not really it's more Aussie, Australian dollar type of news, but 12 o'clock there was a event that might have caused some volatility, as well as 4:30. Right. Just one thing that you must remember: time frames, or not time frames, time zones. This calendar is linked to our website, which is our base is in Cyprus. So this will be in Cyprus time, and they have daily savings time. So from South Africa, from a South African viewpoint, currently, because of daily savings times, this is you'll see here it's GMT +3. And let's see if we can filter that out. If we can change that, I'm not sure. No, can't do it here. Right. So what you must just be aware of that is when it says GMT +3, means it's an hour earlier of us. In South Africa, we are GMT +2. So this obviously, if you look at it today, this would be 4 o'clock, and this would be 14:30 when the news comes out. So this is for Wednesday. Yeah. Right. Let's go back to our questions and answers. Right, Godfrey. Is it correct to say that the price actions affect the fundamentals? Price action is the effect of the fundamentals. So what we have is there's certain things that has an effect on the price. For instance, let's say so it's actually fundamentals is first. The fundamentals cause ripples in the market, and we study that ripples. We call it the effect of. Let me just go to that screen again so we can check it out. Yeah, there it is. Okay, so the fundamentals is what causes the prices to move. When news comes out, when people give their opinion, when especially, let's say for instance with the grains, when the forecasts about when how the harvests are going to be, people can guess before the time, and that causes some effects in the market. That causes some ripples in the market. But when those news events come, the news comes out, that causes the market to move. And we study the market movement because of the fundamentals. Okay, so it's first fundamentals, then technicals. So the fundamentals, the news and the stuff, what people say and so on, the reports, political, environmental, as well as economical reports, they cause market movement, right? And we only study that effect. We study the effects of that on the market movement. Okay. So the price movement, are you correct there? It reflects the fundamentals. That's why one of the principles with technical analysis is that price discounts everything. That means when people buy or sell, they've already done their homework. We don't have to worry about why they buy and sell. We don't really worry about why they buy and sell. We want to know, we look at the effect of that buying and selling on the market. And again, this is all this is. Here you're looking at the effect of what people decided. And that's why this underlying structure is so beautiful, because we all know it's logical. Prices can't go higher forever. I mean, at some point when the price is too high, people don't want to buy anymore. It's just too expensive. And the sellers, the guys that sell those things, are obviously, they will start selling, because when they sell, they get a good price for their products, and they start selling, and then there's a changeover. That's fundamental. That is what technical analysis is all about. So yes, you are correct. Price action reflects the fundamentals. Yeah, all the fundamentals are discounted or reflected inside this price. And that's one of the beautiful things about why we don't have to really worry about the news and so on. You know what it is all about is the fact that we can see even the big funds when they sell. You won't know when they sell if you just in the market, but on the price chart you can see exactly when they're selling. You can see the positions they're taking in. Here, sellers came into the market, and our changeover period was here. And if we had a simple, well-defined method, proper money management, and we're consistent, then we get involved in the market in those areas. There we take our risk, and there we manage our profit. There we take our risk, there we manage our profit. It's just important to realize that not every changeover, not every early stages of a new trend is going to give us a proper entry. For instance, here, it just shot past it. There was no clear entry there. That's why it's so very important to one kick 10,000 times to first understand this structure, or the underlying structure of the market, so you can see these sweet spots, and then have a simple, well-defined method that you practice in practice, obviously combined with proper money management. We use high probability money management, high probability trading, and then you practice and you practice and you practice, and then trading really gets easy, guys. You simply look for these sweet spots, and you get involved in the market there, and you either protect your account if it doesn't do what you expect, or you manage your trade, you manage your take profits when it does. That's how simple it can be. Right. Any other questions? Godfrey, I think I answered your questions from different sides. Okay. Right, let's think. Is there something else? I spoke to you about news trading. Problem with news trading, especially when you're new, is your mental framework. You haven't practiced. You haven't done one kick. You haven't. Normally, the guys don't understand the underlying structure of the market as well, and they don't have a simple, well-defined method. They don't understand what proper money management means. They're not consistent, and then they just want to make big bucks and looking at the news because there's so much movement. That's very, very difficult. And I had another person again that contacted me this week that he knows, he understands, he's done some, but he tried to take shortcuts. So what happened is he had some success on a he understand the fundamentals. His foundation was all right, but instead of practicing and slowly putting his lot sizes up, he thought, oh man, I'll just quickly put up my lot sizes. And the result was that his mental framework wasn't strong enough to handle the pressure caused by the positions he took. And he started meddling with his trades, and he wrote off his account. So, and I think initially he might have had one or two good trades, and then he relaxed and started trading with too many, too large a portion of his account. That's another big mistake you guys do. And then what happens is you only need one or two or three trades that don't make it, and then most of your account is gone. That is not necessary, people. That is not necessary. If you know the foundation, like I explained it, you understand that rhythm in the market, that underlying structure. You understand why we only need a simple, well-defined method, and why we only use proper money management, high probability trading, and then the consistency, the practice. If you understand that, then this is a business, a micro business, because the overheads are so low that can work for anybody. And in effect, just like I said, with where Japan is a very good example. Lots and lots of education is going into teaching people this, so that they can actually manage their long-term. They're all long-term traders. We're all long-term traders because we want to retire someday. So that's the skills that we are teaching, and the technical analysis skills. If you apply that over the long term, obviously it's going to be weeks and month charts that you're going to look at, your pension fund, your annuity funds. If you manage it better, you will get better. You will have a better increase there. That's just the way it works. I've spoken to guys that they're not interested in the lower time frame trading, but they realize the value of just managing their own retirement portfolio. And what they do is they know now about the structure, they know about uptrends, downtrends, and so on, and they simply contact the financial planners and tell them, listen, I want to know what's going on. Where's my pension funds? Where's my annuities? Where's my investments? Give me a little bit of more information. They have to. And on the internet, you can go look at those funds, Alan Gray, whatever, and you'll be able to see the structure of the market here. You'll be able to see, are those guys, where are they trading? You'll be able to see, is it an uptrend or a downtrend? What's happening to the funds? If you see a certain fund that's going in a downtrend, then you know there's a good chance that your increase in the couple, in the next few years might be bad. So if you tell him that you're not satisfied with that fund, look, give me another few options. And most of the guys, for the people that are interested or the people that are more actively involved, they will give you a few options that has been selected. Better funds has been selected by their guys, and then you can choose one where you can see at least it's in an uptrend. There's some momentum there. And over a couple of years, it can make a huge difference to your portfolio. Okay, Godfrey, another question. The height of great men reached and kept was not attained by sudden flight, but while their companions slept, with tolling upwards in the night. Okay, that's a quote from somebody, meaning that people that become great people that go forward, they didn't get it quickly. While other people were sleeping, they were toiling, they were working. And you're quite right, Godfrey. Things that are worth it takes work, takes effort, and that's also one thing I can say about that. Just because I've got time. I meet a lot of guys that has been trading for years, but they never get right. They work hard. You also have to work smart. You have to be wise. If you don't understand about the foundation, then you can work your butt off. You can work day and night. And I can speak of that in the years that I was stuck in entertainment trap when my foundation was not right. I worked very, very hard trying to find that holy grail, trying to understand what's going on. And that type of hard work can really do damage, serious damage to your relationships, your wife, your family. So that is not the kind of work this guy, is talking about. He's talking about wise work. You get the first foundation, you do your homework before the time, find out what is this business really about, get a good foundation, and then you work hard, right? Then you work hard in the right direction. And it's in the trading business, it's very easy to look at, are you being effective or not? Is your foundation right or not? You simply look at your equity curve. Your equity curve will explain to you, will show you if you are doing right or not. Let's go and do some practical here. We've got strategy managers, which is normally, we've got Forex, FXTM Invest. I don't know if you guys know about that, but that is where you can either, if you're a beginner trader, then you can choose people that is a strategy manager, and you can link your account to this. You open a separate account, very easy, and you link it to them, and we can look at them now. So that's for people that start out, they're still learning, but they also want to get involved in another way. They choose somebody that's already a very good trader, and they put their money there. On the other side, if you are good, if you start getting consistent results, and you can become a strategy manager, people can give you their capital, they can link their accounts to you. Very, very important. They don't give you their capital. That's one thing that's beautiful about this Forex Time Invest. I always in my seminars ask guys, who's been scammed, and we talk a little bit about it. And everywhere when people talk about scam, they talk about they give their money to people. With our Forex Time Invest, you don't give people your money. Your money stays in your own account. You just link it, and the trades are copied. Right. So we're talking about equity curves now. So you can, for example, see our ranks. This is where this is traders, and this is the equity curves. This one is going a little bit down. He had a bad time there. This lady, very nice, very stable. She's going up. That guy went very up. He had some issues here with his trading. Very, very stable one there. So what an actual fact can happen is while you're trading, you can choose one of these guys, put a few dollars in, and get some growth. I know I've had a testimony of one person that at one of our seminars told us that while they were busy trading, they also thought about this. So you must just train you a bit how to manage your risk and so forth. I'll choose these guys. For instance, let's link into this guy. There's a couple of things that you can information that will show you. This guy's ranked fourth. This is his average daily increase, monthly, overall return. How many guys are linked to him? How long has he been trading? What's his risk? And so on. He gives you a couple of tips. He says that the minimum to invest is 200. So it's obviously important to read this. And then most important for me is this equity curve. Now, this guy, you can see he's mastered whatever method he does. So yes, you can't 100% win every trade. There will be drawdowns, but remember, you have got a stop loss. You're protecting your account with every single trade you make. With every single trade you make, right? And you can see the effect on this. This guy has a simple, well-defined method. He's using proper management, and his account is growing, right? So this is where you can see, and nobody can really hide it. If you want to be honest to yourself, look at your equity curve. That will show you. This guy has got it nailed, right? He's solid. He's consistent. But you do get other guys which is still struggling. Let's just go back there, especially the guys that are not ranked. Let me just quickly get one for you and show you. And there you can see, and there you'll be able to see. Let's go a bit further. Looking for a very specific type of equity curve here. I'm gonna have to go a little bit further. Right, let's see here. These guys are all doing well. I just want to show you. Okay, here's one. But if you look at the equity curve of this person, you'll see it goes up and down, up and down. Right. Now, if you're a struggling trader, and this is how this is actually, he had good times and obviously he had bad times. But the equity curve of a trader that's still struggling a bit will be up, down. You get some profit, then you give it back. You get some profit, you give it back. And that's when your foundation is not right. Something is not right, your foundation. If you do the things right, if you understand this, you've got a solid foundation, all the things are in place, then you should have an upward curve. You're managing your risk. Even taking profits, you understand, is managing your risk. You're trading with small portions of your account. So then writing off an account, if you trade like that, then it's almost impossible to write off an account. Right. Okay. See some more questions here. Jimmy, yes, we've got time. Nice. Jimmy, can you show us the USD chart again, please? Okay, this is just an example I use to show people the underlying structure of the market in technical analysis. Technical analysis, you've got uptrends, downtrends, you've got your sideways, your ranging markets. But technical analysis, as I said, is about identifying. We look at these charts to identify the early stages of the next trend. That's it. You don't jump in and out. We don't just look at the chart to study patterns and stuff. The core of thing that we do is just what the definition says. We try to identify the early stages of the next trend, because at that sweet spots, I call it sweet spots, where that changeover is the early stages of the next trend. There are risk is small and our potential profit is large. That's how any business works. So you want small risks and you want more. You need to make more profit than you lose, because else you will not be able to survive. Right. Okay, let's see. Keep it up for you, Jimmy. Hi, my name is Godfrey. Another Godfrey. Hi, two Godfreys. That's good. Is it allowed to use the trade signals provided by FXTM? Okay, let's go and look at that quick. It's nice when you have some time. Just going to log in here quick and show you what Godfrey is talking about. Okay, now keep in mind what I just told you. Technical analysis is we try to identify the early stages of the next trend. Now, just keep that in mind. What you see here before you is something the professor and the department, the training department made. And this is where you can look at, it's before the London Open. It's 2 times a day, before the London Open and just before the New York Open, on the 30-minute. Sometimes like here's the 15-minute, but mostly it's on the 30-minute. What we've done, what the professor's done, is he's helping the guys to see the structure of the market. Right. What he's done here is with the signals is to just put some indicator here that shows you the structure of the market. Right. And then at that time, just before the news event, not necessarily at a sweet spot, not necessarily when it's early stages of a new trend. It gives you an example of what you would do, right? For instance, the structure here is it went up, broke past that one, the structure is up, pulled back, and now we're waiting for a potential uptrend. This is not a sweet spot. This is just in this wave structure. it shows you a possible opportunity. You have to understand that very, very quick, very well. So these signals will not guarantee your consistency, right? What the professor has done well as well to help with that, because it's not necessarily that initial stages of the early stages of the next trend, is he's made the profit, the way you manage your funds, very, very conservative. So you're very, very quickly taking some profit off, taking some other profit off, so taking some other profit. So this is what we call high probability trading. So if you do look at these signals and you do see a nice signal like this and you do decide to take it, the chances are very, very high for the market to move that small little bit. You see, it's only a portion. It's not even it's not only one. It's not even 1-to-1. The chances are very high, and then you start managing your risk. So yes, I know some people that do take this, but in the end, this is what technical analysis is. You look at the chart, you zoom out, you see that structure, you identify that sweet spots, that early stages of the next trend, and that's what we focus on. Okay, I hope I answered your question. So don't follow this blindly. Yes, it's proper. The wave structures are nice, gives you a nice idea of other indicators and so forth. That's also in line or not, but just be careful. Yes, it's conservative, it's high probability, but just be careful. Okay. In the end, this is the areas you want to look at. Many times, yes, you will obviously you will see on those signs, signals. Let's look for one. You will see the early stages of the next trend. For instance, let's say that was an uptrend there. You see the early stages of the next trend, and this is going to help you to identify a high, a very nice trade according to technical analysis. But many times it's just simply the next wave, right? So there, for instance, it's a bit of an uptrend. Remember what we want? We want the uptrend for technical analysis, and then we want when the uptrend is not being sustained anymore, there's not buyers going anymore. Here's a beautiful example actually of an entry with which was the early stages of the next trend. Okay, let's look at a few here. Obviously this signal was not, there's no trend here, so this trend wasn't the early stages of the next trend. That's why I say be careful. Okay, let's go back. Hope I answered you, Godfrey. Right. How does this structure accommodate Elliott waves? Okay, I'm gonna tell you now something that the professor said that I heard in the last workshop that we had, and that's one of the problems with technical trading. One of the what I call the entertainment traps. If you think that by knowing all the complicated theories, there's support and resistance theory, the patterns, all the hundreds or dozens and dozens of different patterns that you have, if you study that, if you study Elliott wave, if you study all those things, if you think that's necessarily going to make you profitable, you are wrong. What he said is the following: if you simply take the definition of technical analysis, you have to keep it simple. You have to look at those underlying structure. If you understand that, if you have a simple, well-defined method, if you do using proper money management, if you are consistent, yes, then knowing a little bit more about Elliott waves is going to help you to be more profitable. But if you know all that stuff, but you don't know the foundation, you don't know the underlying and the whole mix of things that come together in the foundation, then you are not going to be successful. I know many guys that they study all these things, they know a lot about Elliott waves, and they still get confused. They still haven't got a consistent net profit over a series of trades. So it can become a trap. It can become what they call like a educational black hole, or a knowledge black hole. So you think you're going to be better the more you know. It's not necessarily that. I've seen people that are 3 months into trading. They have a firm grip on the fundamentals. Their foundation is right, and they're already busy making a profit. And I've seen guys that study 2-3 years, all these complicated things, but they're not able to make a net profit over a series of trades. If you understand what I mean. Even the effect on your mental framework. If you've studied these things, now you think you're an expert. Now you try a shortcut. Remember, the long road is the short road. The short road is the long road. Now they think because they know all these things, they start trading with lots of they demo a bit and then they start trading with lots of volumes. They are taking a shortcut. It doesn't work. Their mental framework is not strong enough. Their basics is not in place. They mess with their trades and they end up, writing off accounts. So it can enhance your trading if you know these Elliott waves. And there's actually, there's simple ways to apply that. But first get your foundation right. First get your foundation right. Start getting your, you want your cash flow of your business to pick up. Right. Okay. Godfrey says, are there different concepts? I hope I answered that question. It's not different concepts. It's just don't get lost and making it overcomplicated. Right. For instance, I'm going to show you quickly something here. I'm not an Elliott wave expert, but let's look here. Right. What you will see is a normal uptrend. So I'm going to use fancy things, fancy language and all sorts of technical language. What do we have here? We have a downtrend, and we have the beginning stages of an uptrend. Here the buyers take it higher than the previous top. We've got a higher top, higher bottom, higher top. We've got a first, what we call a longer, a higher top means it's a longer leg. It's another way of saying it's an impulse wave. It goes up here, and it makes a lower bottom. It's a short wave here, then it's a long wave there. And then there's a short wave, there's a little bit of ruction here, and then down again, and then a long wave up, and then short, and then long. Now, with Elliott wave, they count these waves, and there's certain ways of counting it and so on. It's easy to get lost in that. So, but what you can already see before you is this is a longer wave. This is an impulse for a longer wave. A shorter wave, a longer wave, a shorter wave, a longer wave. Now, due to the fractal nature of this market, there's already opportunities opening up inside here. So if you see a long, this is a possible new long, what do you call it, a uptrend, and you see a pull down here, then what does that mean? That means in the shorter time frames, there's a trend there going. Right, and in the shorter time frames, you're going to see the same structure. And you could have taken an entry there in the shorter time frames, not on this one. You always focus on the time frame, but you can use the higher time frames, the fractal nature of the market, to identify opportunities on the lower time frames. So I think I'm going to do a webinar about that a little bit later. Something about my method applied. Right. Okay, Godfrey says, I hope you all understand. Right, we're just over our time. So if there's no other questions, I think I've answered a lot of questions already. I have to go and run to other things now. Thank you for attending the webinar. If you'd like to, let me just jump there. If you would like to, sorry, let me just go there. If you'd like to contact me, you can just use my email there, contact me. A very, very important part of why Forex Time is such an excellent broker is they call themselves the educational broker. It's not possible for you on your own. It's very difficult anyway to just master this thing on your own. We've got Skype support groups. Email me, then I'll put you in contact. We can talk for support for a form of a mentoring. Right? It's very, very important to get you guys up and running. To master anything takes time. You have to struggle. You have to get to understand and to know those basic things and start to apply them. I've got meetings every single week with guys that just a couple of minutes, depends on how much time you've got, sometimes an hour, sometimes less. We just look at, are you on track? Show me what you're doing. Is it on track? Yes. And then your learning curve goes up much, much, much quicker. So please use that if you can. Right. Goodbye and good luck, guys.